Hey guys, welcome back. Andy here. So that last video that I did about my RBC Direct Investing portfolio reveal video, that video did way better than I expected. Actually, I broke it into two parts, but both videos did way better than I expected. So thank you guys so much for all the love and support that I've received for that video. Everyone who's hit the like button, everyone who gave supportive comments and all. And even if you didn't hit the like button or even if you didn't comment, I still appreciate it because it hooks me up with that sweet, sweet watch time. So continue on the tradition, since I'm on a roll here, I'm going to go ahead and reveal my Wealthsimple portfolio as well. And now, as you guys know, my Wealthsimple Trade portfolio is where I keep all my Canadian stocks. Now, the reason why I use Wealthsimple Trade for my Canadian stocks is that, as some of you pointed out earlier, that Wealthsimple Trade is commission free. And if you use Wealthsimple Trade to conduct trades with Canadian stocks, then it's truly free because you don't have to convert between currencies and all that. So if I ever transact in Canadian dollars, if I buy a Canadian stocks on the Toronto Stock Exchange, I would always use Wealthsimple. I'm not sponsored, by the way. I just really appreciate Wealthsimple as a product, and I just think that it's so revolutionary here in Canada because they're pretty much the only commission-free trading platform here in Canada right now. Now, anyways, I'm going to reveal this portfolio today, so without further ado, let's go. So as you can see, this portfolio is valued at just under 14,000 Canadian dollars right now. Now I'm recording this in the middle of a trading day, so I don't want to give a specific number because it'll be different by the time I end this video and I edit and upload everything. But it's roughly under $14,000. It's like $13,800 or something like that at the time of this recording. And you recall my RBC account has about 47,000 Canadian dollars equivalent. So 35,000 US dollars translates to roughly 47,000 Canadian dollars. As you can see, Canadian dollars are not worth that much at the moment. So yeah, anyways, if you recall, my RBC account has about 47K and this portfolio has just under 14K. So if you combine the two, this brings my total net worth of my portfolio, all my portfolios put together, this brings it just under $60,000 Canadian dollars in terms of total value. Now I'm going to put up what it is in USD right over here. So you can see, for those American friends who don't want to do the conversion, put up the number right there. So as you can see, it's worth this many US dollars and yeah, about 60,000 Canadian dollars, which funny enough is just enough for a base model Tesla Model 3 with full self auto driving enabled. Now actually, that's awfully tempting, isn't it?
Calling RBC Direct Investing. Merci d'avoir appelé RBC Placement en Direct. For English, press 1.
Hey, this is RBC Direct Investing, right? Yeah, my name's Andy. I'm pretty sure I've been authenticated already. Yeah, I'm just calling in to ask, I want to liquidate all my assets, like all my stocks. Yeah, all of them. Yeah, I want to buy a Tesla Model 3. Yeah, with self-auto driving. Of course, of course. So is it done? Great. Thank you, thank you. Ha, got you guys. I'm just joking here. But it would be nice, wouldn't it? If I just liquidated all my stocks, I could just go ahead and buy a Model 3 right now. But you know, not today. Now, anyways, without further ado, let's jump into this portfolio. Now, for stock number one, I have Air Canada stock. So I made a video about Air Canada stock already, so I'm actually not going to spend too much time talking about this. But essentially, I own 35 shares of Air Canada at a cost basis of $16.98. Now, this is not a lot, obviously. It's under like $1,000 of position. So yeah, obviously, you guys hear me talk about Air Canada all the time, and you guys probably thought I had like a lot of Air Canada stock or something, but I actually don't have a lot. And the reason is that it is sort of a speculative play, right? Because anything in travel industry, I think right now is super speculative. You don't know when it's going to bounce back. So I do think that Air Canada will be fine in the long term. And I would love to average down on this stock if given the opportunity. But right now, my cost basis is below where the stock is trading at right now. It's just slightly below. I'm barely break even. But yeah, I mean, at these levels, I could add more if I want to and average up slightly. But it's just not that tempting, right? So if the stock dropped to like, I don't know, $12 or $13 or something like that, where I can average down, then I would have room to do so, right? Because I only have 35 shares and it would be easy for me to average down. So if the stock dropped to those levels, I'll definitely be open to adding more shares. But at the moment, I'm just kind of good where I am. And I'm not really looking to add a lot more shares unless there's some like great news that comes out that just changes the travel industry. Now, again, in the long term, I'm pretty bullish on Air Canada because if you would notice the stock chart of Air Canada, before the whole Roni situation broke out, this was a $50 stock and now it's trading at less than half of what it is. So obviously in the short term, it's not going to get back to pre-Roni levels and I'm not expecting it to. But in the long term, if it does get back to being a $50 stock, I would essentially double my money, which is a pretty good risk to reward in my opinion. So my opinion is this, right? If you don't have any speculative stock and you're looking to buy something and you just have a little bit of money to sort of play around with and you're comfortable with losing a little bit of it potentially, then I think you should look into maybe potentially picking up some shares of a company like Air Canada. It doesn't have to be Air Canada specifically, but if you're looking to add any spec stocks, I think Air Canada is a good play. And the reason is that, as I mentioned in the Air Canada video, they have some opportunities that other spec plays don't have, right? So for example, for a company like Carnival Cruise, which was also a company that I was involved in, for a company like Carnival Cruise, CCL, they had to shut down their operations. So we just received a report that all their cruises are going to continue to be suspended until I think it was September, the report said. So their operations are going to be shut down for a while versus Air Canada. They can go into the cargo industry, right, or the freight transport industry. As I mentioned in my Air Canada video, as the number of passenger planes go down, they could just repurpose all the planes and rip out all the seats and put cargo in it and fly cargo. Now actually the demand for cargo has gone up because everyone's like online shopping, everyone's getting things delivered to their house and everyone's working from home. And what you want to know about passenger airlines is that passenger airlines actually carry freight underneath the cargo hold. It's called the belly hold. So if you ever taken a passenger flight, just any regular old passenger flight, what you might not have known is that there's actually cargo underneath you. So it's not just like people checking in their luggage and passengers' luggage and stuff. Passenger planes actually flies cargo regularly, even during normal times. Now, as the number of passenger planes go down, the amount of cargo capacity also goes down because those flights have been canceled. So we actually have a situation where we have the demand for cargo going up and the supply of cargo, of transporting cargo, going down. So that represents a great opportunity for these passenger airlines like Air Canada to really capitalize and convert their planes to cargo planes and fly cargo-only flights. So I think that that's part of my bullish thesis on Air Canada. And I think in the long term, they're going to do fine just because they can easily transition. Well, not easily, but they can slowly transition their business from being focused on flying passengers into flying cargo in this post-Roni world. Now moving on, number 2 is CGL. Now you guys might not know what this is. This is a gold ETF. So what a gold ETF is basically, it's a gold trust, right? So you put your money into this gold trust and it's backed by some like physical gold that's stored somewhere in a vault somewhere. And the purpose of that is that it'll mimic the price behavior of gold. So you can sort of buy into gold without actually having to go buy physical gold. Now, I made a video on this too, on why I'm buying gold. And the reason why I'm buying gold is just, I think it's a great hedge against inflation. Historically, gold is seen as something of value, and it serves as a diversification tool for you to spread your money around in your portfolio so that you don't have all your money in one basket. So I know a lot of you right now are probably sitting on a pile of cash just waiting for the next crash, and I'm sort of doing that as well. So if you look at my cash balance on my Wealthsimple Trade account, I'm mostly sitting on cash in this account as well. But at the same time, I also do want to spread my money around a bit and put some money into gold just because you can't print more gold, right? So I know it's become a meme these days that the Federal Reserve and even the Canadian Central Bank, they're doing all this QE, they're doing all this printing money, the money printer goes brrr, right? So yeah, it's become sort of a meme these days. So you can print as much money as you want if you're the Federal Reserve, right? All it takes is just for you to snap your fingers if you're Jerome Powell. All it takes is for Jerome Powell to snap his fingers, and then more money can be created. But what you can't do, and what Jerome Powell can't do, is create more gold. So the amount of gold in the world is limited. Now, limited for now, unless we invent, I don't know, asteroid mining or something, but that will be at least, 50 to 100 years from now. And back to the point of why I chose to buy an ETF instead of buying physical gold. So if you're wondering why I didn't just buy like gold bullion or gold coins or something like that, it's because of the cost of storage, right? So it's a security risk too. Imagine if I just bought a bunch of gold bars and then I just kept it in the house. What if my house gets broken into? So it costs a lot of money to store the gold too. If you put in a safety deposit box at a bank, you're gonna have to pay for that box. So I just don't think that it's worth it for me just to buy a bunch of physical gold and keep it. And also physical gold could be less liquid too. So if you ever want to redeem it for cash, then you're gonna have to bring it to a pawn shop or use one of those like cash for gold websites, right? So I'm sure you've seen those ads, but what those ads don't tell you is that they'll always win, right? They won't let you win. So when you sell gold to them, they won't pay you the best price possible because obviously they need to make money on their end. So they won't give you necessarily the best price when they buy gold off of you. So there's also all these like disadvantages to owning physical gold, and I just don't want the hassle of storing it and having an illiquid asset and all this stuff that I have to deal with by buying physical gold and the security issues, right? So yeah, I just don't want to deal with those issues, which is why I bought into a gold ETF, which if I wanted to, I can just turn on my phone and just sell it right now if I wanted to. So it's immediately liquid. And yeah, that's the advantage of having a gold ETF. Now you do have to pay a small expense ratio, but I think for me that's worth it so that I don't have to store physical gold. Now this is a Canadian ETF, so you don't have to buy this one if you don't want to. This is just an example, but if you're American, there's one called GLD, so that's the SPDR gold shares. That one's way more popular because the American market is just so much bigger, right? So yeah, you can look into GLD if you're an American, if you're willing to transact in US dollars. So there's plenty of gold ETFs out there. You don't have to, you can just pick one. They're mostly the same, I think. You might not want to pick like some small like no-name ones where the market cap or the asset under management is like super small because the fund might not be super stable and might like go bankrupt or something, right? But if you buy into, let's say like GLD or something, they have like billions of dollars of gold under management. So you're not in any issue of like potentially the fund having to liquidate or anything like that. So yeah, that's one potential option as well. And yeah, I own 50 shares of CGL at $20.76 each. So that comes out to be, I think, like $2,000 or something like that. So that's essentially what CGL is. Now the third and final stock that I own in this portfolio is of course Ryokan. Now this is by far my largest stock holding in this portfolio, besides my cash balance of course. But in terms of stocks, this is my largest stock in this portfolio, and I own 200 shares of Ryokan at $15.08 cost basis. Now, of course, I made a video about this as well. You can go check it out if you want to. I talk about this a lot, and I'm sure you've heard me talk about it. And for this stock, I'm not really looking to like trade it or anything like that, just because I'm in it for the dividend. So I don't really care that much about the price movements. In fact, I would rather it crash because as soon as it crashes, the dividend yield just goes through the roof, right? So right now, my average yield, I think, is around 9.5%, which is already pretty amazing. And if you look at the payout ratio of Ryokan, it's like 60, it's under 70%, which is, I think, one of the best deals on the stock market, where you can get a 9.5% yield at a payout ratio of under 70%. Like, sign me up, right? So yeah, that's why I bought so many of this stock. Ryokan, if you don't know what they are, they're a big commercial real estate holding company here in Canada. So they own like plazas where grocery stores and other retail stores are built upon. And the majority of their customers are actually essential service customers, like grocery stores and things that have been allowed to remain open despite the Roni situation. So I think that for the short term at least, their income is still pretty stable. And if you look at their stock chart of before the Roni situation hit, you can see that their price is around double what it is now. So my strategy is basically, if you just buy a ton of Ryokan shares and you just wait for, I don't know, like 2, 3, 4 years, eventually I think it will go back to where it was before, which is double where it is now. And once it does, you can sell half of your shares, and then you just basically recover 100% of your principal, and you just leave the other half, and that other half will compound your dividends forever. Now, the good thing about Ryokan is that they do pay monthly dividends, so they pay 12 cents per share. So if we're doing the math, 12 cents per share on $200, that equals exactly $24 a month. So on Ryokan, I'm making $24 a month just by doing absolutely nothing. I'm literally just sitting here and drinking my coffee and making $24 a month. Now, $24 a month might not sound like a lot, but hey, it's like more than a Netflix subscription, right? So basically, I'm getting Netflix for free for the rest of my life, so long as I don't sell my Ryokan stock, which is a pretty great deal if you ask me. So anyways, that's Ryokan stock. And that's my entire portfolio revealed. Now you can see that I still have like around $8,000 Canadian dollars worth of cash at the moment. So all that cash I'm just sitting on, and I'm just essentially waiting for the next big deal. Now, if you're wondering where that cash came from, well, if you recall, I used to own Shopify, right? So Shopify is a Canadian company, so I actually bought the Canadian version of Shopify on my Wealthsimple Trade account. But I ended up selling Shopify when it hit around 800 Canadian dollars per share. Now, granted, that was way too early, because if you guys have checked the stock price of Shopify lately, you guys would know that it's trading around 1,200 Canadian dollars per share right now. So I chickened out way too early. But here's the thing, guys. I think that Shopify is one of the most overvalued companies on the stock market right now, and I don't think you can argue against that. And I'm still super bullish on Shopify, by the way. Don't get me wrong. I'm still a big believer in Shopify, but you cannot argue that the stock is not overvalued at this point. I'll just put up some chart of the PE ratios and all the stock price gains of over the last like 6 months, and you can see that it just blows everybody out of the water, right? The 4P is just so insane that it's just miles ahead of literally everyone else. It's miles ahead of like Amazon, Tesla, Facebook, Apple, Google, any other like famous tech company, anything else you can think of. I just think that, yeah, you cannot make an argument that Shopify is not overvalued at this moment. And you know me, I'm a long-term investor, and I sort of follow Warren Buffett's strategy, which is value investing, which means that you would sell a stock if it's overvalued, or if you think it's overvalued, and you would buy a stock if you think that it's undervalued. And so that's why I sold Shopify. Just because I believe in Shopify and just because I think they're a great company doesn't mean that they're not overvalued, right? So unfortunately, Shopify has just gotten to the point where I did not feel comfortable holding it for a long term, just because I do now believe that it is super overvalued. So that's why I sold Shopify. Again, as I said, you can't time these things, and don't try to time these things. And the sooner you start trying to time the market, the sooner you start losing money, right? So don't try to time these things. It is what it is. So yeah, anyways, that's my portfolio revealed. I hope you guys enjoyed this video. Be sure to hit the like button because it does help out with the YouTube algorithm, and consider subscribing if you like this series. Be sure to follow me on Twitter and Instagram. I'll leave the links down below in the description as always. And with that being said, I'll see you guys in the next video. Bye bye.